Everybody who wants to pay more taxes, raise your hand. Yeah, that's what I thought. I didn't think there'd be any takers. This week in my article and video, I wanted to talk about the final tax return, what executors need to know to avoid paying more taxes than they need to. Hi, Nancy Beauvert here with Agape and NEXsteps. There are a lot of things that an executor has to take care of when somebody passes away. They have to, first of all, make sure they've taken care of all the assets, secured all the assets, that they know where everything is. They have to deal with the funeral. They have to notify everybody. There's a lot to do. And a lot of what has to happen from the executor happens after the plan has already been set in motion by the testator. So the better the planning prior to passing away, the less taxes that you're going to end up potentially paying. Once you've already created your last will and testament and you've created your plan and you've got all of your financial affairs in order, depending on how you've structured that will depend on how much tax ends up being paid. There are a lot of things that you can do to mitigate taxes legally. There are a lot of things that CRA has in place. But there are also a lot of pitfalls that people don't know about and don't think about when it comes to making sure that they've done their planning to minimize the amount of tax that is going to be due on the estate. When you can name beneficiaries, that's the ideal, best way to avoid paying taxes on things like life insurance policies. If you structure a life insurance policy, that pays out directly to the beneficiary, and it is completely outside of probate, and there is no tax involved. If you keep things in an RRSP, and you have a partner, a spouse, those assets can transfer to your spouse tax-free. But let's not forget that tax-free is really just like what an RRSP was initially designed to do, and that is to defer taxes. So when your partner, when your spouse passes away, kind of a gross term, but it's termed as last to die, that is when CRA will get their taxes. So you need to plan for these kinds of things. If you can work with your planner so that you're moving your financial assets to tools that still allow your assets to grow, but also protect from taxes. So let's get back to what happens after you pass away now. Everything's already set in stone. Nothing can be changed. Now, these are the things that your executor needs to know. There are deadlines on when the filing has to happen. It depends on when the person died. If the person passed away between January 1st and October 31st, the taxes have to be filed by April 30th of the following year. If the person passed away between November 1st and December 31st, they have 6 months to file the final return. Now, that final return, besides having that CRA deadline to be filed, make sure that you have all of the slips in place. That can avoid a lot of delays as well. In one estate that I'm currently working on, there was an RRSP that was named to beneficiaries, but because the beneficiaries did not take action within a specific time frame, the amended T4 RIF on that account wasn't received until after the final return had been filed because of those CRA deadlines. So what happened was we then had to file an amended return. Well, I'm sure it's no surprise to anybody who's been paying attention to the news. Our tax department right now, the CRA, is experiencing, shall we say, some issues. And trying to get things done in a timely fashion isn't necessarily the strong suit right now. So This amended return was actually filed 6 months ago, and I still don't have a date on when the amended notice of assessment is going to come through. After that's received, then the estate will pay the taxes that are due on that account, and then we still have to apply for the clearance certificate, which typically takes 4 to 6 months to receive. So because of this amended return, the closing of this estate is going to take at least 6 months, maybe 8 months or longer than it normally would have. So wherever possible, you want to avoid that. Another thing that the executor needs to be aware of is that there are different nuances across every different provincial and territorial jurisdiction in Canada. And I'm sure that the same applies in the States. We in Canada do not have a formal federal estate tax, but there are probate fees, and there are certain things in certain provinces that do add to the cost of settling an estate. Make sure that you understand different items will be taxed differently in different jurisdictions. And beyond that, it can get complex if somebody lived and passed away in one jurisdiction, but owned property or other assets in a different jurisdiction. There can be different things that are required in a different jurisdiction that will add to the time, will add to the amounts that are owed from the estate. Another thing that you have to consider is, was there a small business? There could be different taxation issues pertaining to how that business gets settled. What happens to those shares? Was it a sole proprietorship? Was it an incorporated company? Was it a partnership? Just how was that structured? Was it a larger company? All of those things also play into the whole filing and tax strategy. So one of the things that is really important to do if you are the executor is, unless you're well versed in this, do not worry about having to know everything. You do not have to do this alone. You should bring in the appropriate professionals early and make sure that you are working with them throughout this process. Perhaps the deceased already had an accountant or a tax lawyer that they were already working with for their business, for their personal and professional business. You can continue to engage those professionals who are already familiar with all of the items at hand. If they don't already have somebody, hire a professional, bring somebody in, explain everything that's going on. Those people, it is their job to know about the tax laws. It is their job to make sure that things are being done properly. They're there to help you and guide you. Also, you can get some support from people like me. I'm a certified executor advisor, and although I don't do tax returns, I don't provide accounting or legal advice, I do provide enough background to be able to help you and guide you to finding the appropriate people that you need to have to help you with those final filings, as well as to give you the strength, the comfort, the support to make sure that you're following the steps properly. As always, I've got the article over on my website. I've got the link in the description box. Hop over. It's got some more detail in that article. I think that you'll find it enlightening. Remember, all of us understand the necessity of paying taxes. We know the services that we get from those taxes. But I don't know anybody who wants to pay more taxes than they have to. So hop over, read the article, learn how to avoid paying more taxes and how to stay on track with CRA as the executor and out of trouble. Thanks very much for joining me this week. I look forward to sharing more with you next time. Bye for now.